Hello students, welcome to AffairsCloud. My name is Shashmita. We have an app by the name Careers Cloud which you can go and download through the Play Store. Once you have downloaded the application, you will easily be able to log in using your Gmail ID. And once you have logged in, you will be redirected to this page where you will be getting this UI. And there will be option for home, all courses, my courses and doubt section in this application. You will be getting multiple PDFs, multiple content on daily basis that will be enhancing your learning. Under Crack Current Affairs, you will be able to see multiple options. First one is Current Affairs English. We upload the day-to-day basis news in the English format. And apart from English PDF, we also provide them in Hindi format. And this banking awareness, we upload a PDF every month. So this PDF will contain the banking news, banking and the finance news of that respective month. And Current Affairs Exam PDF will have two categories. One is that most important news of that particular month will be uploaded in this Current Affairs Exam PDF. And also Exam Perspective PDF will also be uploaded. And next is Special CA. This will contain Union Budget, Economic Survey, and also the most important events that had taken place globally as well as nationally. And next most important is topic wise. So the entire news of that particular month will be segregated into different topics. And in order to recollect whatever you've read, we also provide you with topic wise quizzes. Apart from that, we also provide state current affairs. Now, here if you see, we provide you with the day-to-day PDF, and this we provide you with the weekly PDF. So that particular week news will be compiled into a PDF and in question and answer format in English and will be uploaded here. And to enhance your learning, you can also, to enhance and strengthen your learning, you can also attend the quiz. Here we provide you with the entire news of that particular week. But here we take the top 60 most important news and we upload it in this PDF in question and answer format. Apart from weekly, we also provide you the monthly ones. This PDF will contain detailed view of that particular month news. And this will have a brief format of the same news. This will be in the form of a question and answer format, and this will have the top 100 question and answer of that particular month. We also provide you with the PIB news on a day-to-day basis, which you can go and read in these particular tabs. Apart from that, we also provide the Union Budget and Economic Survey. You can also attend after reading the PDF, you can also go and attend the quiz. This is available in the Special CA category. We also provide state level current affairs. So this will be very helpful for students who are preparing for state level exams. For example, if you are preparing for Tamil Nadu state level exams, then you can click this tab and you will be able to see all the current affairs or news related to Tamil Nadu. Apart from that, we also provide PDF from the exam perspective. Suppose you are preparing for RBI Assistant Mains, then this tab will contain 5 to 6 months of current affairs, which has high probability of being asked in RBI Assistant Mains. Similarly for SBI PO, RRB PO, Clerk Mains, all these are being given under this section. And also we provide separate content-wise, topic-wise current affairs like national affairs, government schemes, international affairs, banking and finance, economy and businesses, MOUs and committees and meetings. All these different types of news are segregated in these particular categories. Hello students, welcome to our new initiative. In this initiative, we will be uploading the weekly current affairs on banking and finance section. So this will be uploaded on every Monday. And so on the whole, per month, you will have totally 4 videos related to this topic. And apart from just providing you with the banking and finance news, we also provide you the conceptual explanation so that this will enhance and also strengthen your knowledge about these topics. Today, we will be covering August 2nd week banking and finance awareness news. Moving to the first news. The first news is that RBI issues revised master directions on the fraud risk management for the regulated entities. Now, what is this fraud risk management and why is this being enforced? So these fraud are related to the loan account. So if you see a proprietor, for example, a proprietor has availed a working capital loan to run his business. So after applying for the loan, he also gets the amount to his current account. So instead of using that for the business, what he does is that he silently transfers the entire amount to his personal savings account and then encashes it immediately and uses it for his personal purpose. So this is misappropriation of fund. This fund, which has to be used for his business purpose, it is now being used for his personal purpose. So this is also a fraudulent activity and this account can be flagged as a fraud account. So this is an example of one such case. So for this, to identify that fraudulent activity is taking place in an account and also to early detect it, also to prevent it, this directions has been issued. So let us look into them in detail. So this framework was introduced to prevent, early detect and timely reporting of frauds in regulated entities. So this is applicable to the commercial banks including RRB and also to the All India financial institutions and then to the cooperative banks and also to the NBFC. So if you see RBI, it has issued 3 circulars separately. One for the NBFC, the other for the cooperative bank, and the last one for the banks, which includes both the commercial banks and the All India financial institutions. So here, 2 things are common across all 3 circulars. The thing is that all the three things, that is NBFC, cooperative and banks, they have to form a committee that will follow up and also monitor the fraud that is taking place. So the common first thing is that they have to form a committee to follow and also to monitor the frauds. The second thing is that before flagging an account as a fraud account, so a fraudulent activity has taken place and the bank has also detected that fraud. But before tagging that account as a fraud account, what the bank should do is send the director or the proprietor or the partner a show cause notice stating that a fraudulent activity, this kind of fraudulent activity has taken place in your account, and so we are going to tag this account fraud. But if you have any valid explanation, do come and produce it to us. So they will give a time of 21 days to the customer after sending the show cause notice, and the customer should respond within 21 days if they do not want it to be flagged as a fraud account, and they should have a valid explanation. So they can come and explain themselves. They can tell that they are genuine, it is a genuine transaction. They can come and tell it to the bank. So this option is given to the customer. Within 21 days, they have to come and report to the bank. So these 2 things are common across all the 3 circulars, that is for the NBFC, cooperative and the banks. Now let us look into the NBFC circular. So the Reserve Bank of India directions, it have been issued under the section 45K, 45L and 45M of the Reserve Bank of India Act 1934 and section 30A, 32 and 33 of the National Housing Bank Act of 1987. So here it includes all NBFC, that is including even housing finance companies, and the upper layer, middle layer and the base layer having an asset size of 500 crores. So not all NBFC in the base layer are included. Only the NBFC having an asset size more than 500 crores are included in this direction. So upper layer, middle layer and base layer. Next one is that they have to form a committee of the board, as I mentioned in the first slide. It should be a special committee of the board for monitoring and follow-up of cases of the frauds. And it should have a minimum of 3 members of the board. So each NBFC or a company, they will have a board of directors, right? So from that, at least 3 members of the board of directors should be involved in this committee. And among the 3 members, one must be a CEO. That is, Chief Executive Officer should be one of the members, and the other 2 members should be the independent directors. So at least 3 members should be there. In that, one should be CEO and the other 2 should be an independent director, and this committee should be headed by an independent director also. So remember, this composition is very, very important. This composition differs from the 3 circulars. So for NBFC, it is one kind of composition. For bank, it is different, and also for the cooperative bank, this is different. Committee is same throughout the all the 3 circulars, but the composition of the committee is different from one circular to the another. And in case of middle layer and base layer, there was an option being given. So in case of middle and base layer, they are allowed to constitute a committee of the executives with a minimum of 3 members, and at least one of them should be a whole-time director. So remember, only in case of middle layer and base layer, this option is given. That is, it can have a whole-time director and it can be a committee of executives. Okay. Next point is that a show cause notice. As I mentioned, a show cause notice will be issued to the entities, that is the promoter or the whole-time director, and a reasonable time of not less than 21 days shall be provided to the entities or the persons, and they have to respond within this 21 days to the show cause notice. And also the NBFC, they have to submit a quarterly return, that is, report on any bank robbery or theft. Regarding that, it has to submit to the RBI within 15 days from the end of the quarter to which it relates. Suppose if you see in May month, some burglary has happened in an NBFC, then the quarter ends in June, right? So by July 15th, this report has to be submitted to the Reserve Bank of India. This is the case of the NBFC. The next is cooperative banks. So this directions is issued under section 21 and section 35A, right, with section 56 of the Banking Regulation Act 1949. So this will be applicable to the primary urban cooperative bank, state cooperative bank and the central cooperative banks. So this direction will be applicable to these 3 types of cooperative banks. So here they have to form again the committee with a minimum of 3 members of the board, and it should consist of the CEO and 2 directors which will be headed by one of the directors. So here the composition is CEO and plus 2 directors. They haven't mentioned any independent director or executive director. They have just mentioned that they have to have good financial knowledge and all. So that is all mentioned about this directors, and it should be headed by one of these 2 directors. In case of Tier 1 and Tier 2 alone, and also in case of State Cooperative Bank and Central Cooperative Bank having deposit size lesser than 1000 crores, they have the option of forming a committee of the executives and with a minimum of 3 members, and one of them shall be a CEO. So here in this case of Tier 1 and Tier 2 and State Cooperative and Central Cooperative Bank having deposit less than 1000 crores, they can form a committee of executives. Just like in the previous case, we saw in case of middle and lower layer, they can form a committee of executives. Here for these cases, they can form a committee of executives. So this is the composition of the committee in the case of cooperative banks. And apart from that, Tier 3 and Tier 4 and State Cooperative and Central Cooperative having a deposit size of more than 1000 crores, they have to have a framework for early warning signals under the overall fraud risk management policy. Now, these early warning signals are just like an indicator. So, these indicators are created by the banks for various types of transactions. So, as we saw in the first case, right? So, when a working capital loan has been sanctioned to a customer, what he does is he immediately transfers that amount to his savings bank account and encashes it. So this is kind of an indicator for this will be created by the bank to monitor this kind of transaction. When this kind of transaction is found by the indicator, then an early warning signal will be shown or will be thrown to the system, that is to the bank. Then the branch manager will identify this early warning signal, and then he will take the necessary action. So, early warning signal will hit the branch to monitor whether any fraudulent activity is happening place in the account or not. Because there are thousands of accounts and there are lack of transactions that are taking place. So, it is impossible for the bank manager to go and see the account individually. So, this early warning signal will consolidate all the fraudulent activity taking place in each and every account and throw the signal if at all there is any. And then after looking at this signal, the bank manager can take any appropriate actions. So this is the purpose of the early warning signal, and these Tier 3 and Tier 4 and these banks with more than 1000 crore deposit size, they have to form an early warning signal framework. The next is about the banks case. So here the banks include the foreign banks, local area banks, small finance bank, payment bank and regional rural bank, and also the All India Financial Institution. So these banks shall also have a framework for the early warning signals and red flagging of account. So early warning signals, we read about it in the previous slide, and red flag account, if you see, it is an account where a suspicion of fraudulent activity is thrown by the presence of 1 or 2 more early warning signal indicators. So when one particular account A itself shows some 3 to 4 early warning signals, that is 3 to 4 fraudulent activities are happening, then this account will be flagged as a red flag account. This is the meaning of a red flag account. So there should be a proper framework, like what all indicators, because you should know, right? If even if you miss one type of indicator, a fraud might happen and you may not even be aware that a fraud has taken place. So all possible of indicators or all possible early warning indicators has to be identified, and it has to be mapped to all the accounts. If at all a fraudulent activity takes place, then that signal will be thrown. So the fraud risk management policy shall be reviewed by the board at least once in 3 years or even more frequently. So this fraud risk management policy, it is dynamic in nature. So you see the world is improving. So from now it is in the digital era. So a lot of fraud happens in the digital era side, that is in digitally. So frequent monitoring or frequent review of this fraud risk management policy is a must. So here they have mentioned that at least once in 3 years this has to be reviewed. The bank, it has to constitute a body, a committee of the board, that is called as the special committee of the board for monitoring and follow-up of cases of fraud, just like the NBFC and the cooperative banks. And here the composition is that it must contain at least 3 members of the board, and it should be a whole-time director and a minimum of 2 independent directors or non-executive directors. And the head of the committee should be an independent or a non-executive director. So, as I said, the committee formation is common in all the case, NBFC, cooperative and banks. But the composition of the committee is the difference among these three. So first, if you see, it is CEO and independent director, and it has to be headed by an independent director, and there was an option given to the middle and base layer NBFC. In case of cooperative bank also, it should be a CEO and a director. And an option was given to the Tier 1 and Tier 2 and state and cooperative bank having lesser than 1000 crore deposit size. The last one, in case of banks, they have to form a committee, and it should be have whole-time director and an independent director or a non-executive director. And here it should be headed by an independent director or a non-executive director. So this is the main difference of the composition of the committee. Now, after finding a fraud, the bank shall report to the law enforcement agencies. So if you see, in case of a private sector or a foreign bank, if the fraud amount is lesser than 1 crore, they have to report it to the state police. In case the fraud amount is more than 1 crore, then addition to the state or the union territory police, they should also inform to the Serious Fraud Investigation Office, that is under the Ministry of Corporate Affairs. In case of public sector banks and regional rural banks, if the fraud amount is lesser than 6 crores, then the police department, and if it is more than 6 crores, then the CBI is involved. So remember this, it is very important. So next news. So these are the various fraudulent activities that might happen. So if you see misappropriation of funds, fraudulent encashments, manipulation of the book of the accounts, and also fraudulent credit facilities, and also fraudulent transactions involving foreign exchange. So these are the various fraudulent activities, and for each kind an early warning signal indicator would have been defined, and this happens if any manipulation of book of accounts happens, then this will throw a signal, and then the bank manager will take accordingly an action. We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness course lays a foundation to the current banking and finance news. Now, you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the Static Banking Awareness course, and under the Details tab, you will be able to see a brief about this course. And under the Part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the Free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. we also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course. The next news is that RBI revised instruction on the BDDR for the cooperative banks to ensure uniformity. So BDDR is bad debt and doubtful reserve account. Now, before getting into this news, you should know two financial parameters, that is GNPA and NNPA. Gross NPA and net NPA. The difference between gross NPA and net NPA is provisioning. So when you provision the gross NPA, then it becomes net NPA. Say there is a bank and it has a gross NPA of 10 crores. Now you have kept aside a provision of around 3 crores. Then the net NPA will be 7 crores. Now, how do you set this provision? This provision is set out from this money of, that is the provision requires money, right? That is what it means. So this provision will be taken from the net profit of the, it will be taken from the profit of the bank. So there was a difference, like one bank was following one procedure and the other bank was following other procedures. So that is that, if you see currently a lot of cooperative banks, what they were doing is, this is a profit and loss account. In that case, you will have an income, right? And then you have a lot of expense. So first you'll have an operating expense like say salary, rent, and then you have non-operating expense like maybe interest, and then only you will arrive at the net profit, right? So what few cooperative banks were doing is that they were taking this provision from this net profit. So if the net profit was say 100 crores, then from this 3 crores was taken, the provision. So what RBI tells that you shouldn't take your provision like this. What you have to do is that provision is also an expense. So before calculating the net profit itself, you have to declare this provision as an expense. Here itself the 3 crores has to be declared as an expense, and then only a net profit should be calculated. So they have told that you nowadays, in a lot of cooperative banks, you are taking the provision from the net profit. But before calculating the net profit, this provision should be declared as an expense, and then only this net profit should be calculated. So this provision amount should be taken from the expense and not from the net profit. Okay. This is the difference that this is the instruction that the RBI has told the cooperative banks. This revised instruction will be applicable to the urban cooperative banks, state cooperative banks and the central cooperative banks. So RBI noted that banks may have created provisions required as per the IRACP, that is income recognition and asset classification and provisioning norms, by appropriating from the net profit rather than recognizing the same as an expense in the P&L account. So further from March, as at March 31st, 2025, it should not happen. In March 31st, 2025 balance sheet or the profit and loss account, you have to mention this provisioning as an expense before calculating the net profit. So what they have told is that the BDDR 2024, an appropriation should be made directly from the P&L account or the general reserve to the provision for NPA. Such provision will be permitted to be netted off from the gross NPA to arrive at net NPA. So after passing the aforementioned entries, the balance in the BDDR can be reckoned as Tier 1 capital. However, the balance in BDDR cannot be reduced from the gross NPA to arrive at net NPA. So, see, as on March 31, 2024, there is already a BDDR was formed from the net profit. Okay, now for this 2025, what the RBI is telling that you have to consider it as an expense before calculating the net profit, and this expense, that is the provision declared as an expense, that should only be used to calculate to arrive at net NPA from the gross NPA. So from this financial year, since you will calculate the provision as an expense, Now there will already be some amount in the BDDR, right? So from as on 2024 BDDR, as of the financial year 2024, there was already the provision amount was stored in this BDDR account. So since from this financial 25, you will calculate as an expense in the profit and loss account. So this BDDR, whatever amount is stored in this BDDR account, this can be used to calculate as a tier 1 capital. So after passing the aforementioned entries, after calculating the expense separately under the profit and loss account for the provisioning purpose, since already you have made the provision as an expense in the profit and loss account, now you don't have to store any money in this BDDR. So this money, the balance in this BDDR can be record as the tier 1 capital. So I hope you understand. So previously what we used to do is that what the cooperative bank used to do, that from the net profit an amount was allocated in the BDDR for provisioning purpose. But from this year onwards, expense should be considered as an expense before calculating the net profit. So there is no need of the amount mentioned in the BDDR, and so the amount or the balance in the BDDR can be calculated as a tier 1 capital, and the BDDR in the balance in the BDDR should not be used to reduce the or to calculate the net NPA from the gross NPA. So I hope you understand. The main thing is that no provisioning from net profit. Provisioning should be considered as an expense. This is the main point to be remembered. Moving to the next news. The next news is that FPEL received 275 million funding from the IFSC, ADB and DEG consortium. DEG is a Germany-based investment corporation. So Hyderabad-based renewable energy company, Fourth Partner Energy Limited Private Limited, it has received an investment of $275 million from a consortium of 3 development financial institutions. So from IFSC, it has received $125 million, from ADB it has received $100 million, and from DEG it has received $50 million. So the capital injection, it will be used to expand the renewable energy portfolio to 3.5 gigawatt by 2026. So if you see this FPEL, it is set to commission the first 575 megawatt wind solar hybrid project in Karnataka, and FPEL has an existing install base of 1.5 gigawatt of green asset. The founder and ED of the FPEL is Saif Dorijwal, and it is headquartered in Hyderabad. So it will get funding from ADB, DEG and IFC. So FPEL will get funding from these 3 institutions. Next is that RBI issued master directions on the treatment of willful defaulters and large defaulters. So what is it? So who are a defaulter? Who is a willful defaulter? So the person who has the capacity to pay but is not willing to pay, the person who has diverted the funds availed under the credit facility, the person who has siphoned off the funds, and also the borrower who has disposed of immovable or movable assets. So you would have mortgaged the property to the bank. So using that property only, the bank would have given you money. But without the knowledge of the bank, you would have sold that property. So all these activities, if any of the activity has been done, then that customer will be called as a willful defaulter. So in case the RBI has told that the willful defaulter having an outstanding amount of more than 25 lakhs, then it will be considered as a willful defaulter. So if it is, the outstanding is more than 25 lakhs, and if any of the following 4 or 5 conditions that we have mentioned in the previous page has come is true for this customer, then it is considered as a willful default hold. And in case of a large defaulter, then it has to be an outstanding amount of rupees 1 crore and above. So the new directions define willful defaulter as a borrower or a guarantor who has committed willful default and the outstanding is more than 25 lakhs. And in case of large defaulter, the outstanding amount is more than 1 crore. And then is applicability. So to which all banks it is applicable. It is applicable to the banks, NBFC, All India Financial Institution, also to the Asset Reconstruction Company, and also to the Credit Information Company. So what is the procedure to identify and classify this willful defaulters? So during, the evidence of the willful default will have to be examined by the identification committee. So there will be a committee, and that committee will see all the evidence of this willful default transactions. And during its examination, if the committee finds that a borrower has willfully defaulted, then it will give a show cause notice. So it will send a show cause notice to the willful defaulter, and a 21 days timing will be given. Within that 21 days, the person has to come and present himself and tell whether it is a genuine transaction or not, or tell his point of view within 21 days of its issuance, of the show cause notice issuance. And if the lender, that is the bank, finds that the borrower has willfully defaulted on a loan, they will be required to complete the entire process of categorizing the borrower as a willful defaulter within 6 months of the account being classified as NPA. So suppose today the NPA has, today the account has been classified. Suppose today is August 1st, and then the account has been classified as NPA. Then within 6 months, it has to complete the entire, within February 2025, it has to complete the entire willful default process and submit it to the RBI. Reporting of willful defaulters and large defaulters. So as per this RBI direction, the lender must report the matters pertaining to willful defaulters to the Credit Information Company. So this is very, very important, because if at all the willful defaulter goes to some other bank to avail the loan, then the other bank will come to know about his default, and he will caution himself from giving any loan to this person. So providing these details on time to the Credit Information Company is very, very important. The lender must report matters pertaining to large defaulters to the Credit Information Company at monthly intervals, which will include the suit filed accounts and the non-suit filed accounts. So both has to be reported to the Credit Information Companies on a monthly intervals. Next is the consequences on classification as willful defaulter. So now a person has been classified as a willful defaulter. Now what is the consequence on him? So the consequence is that the direction is that the lenders will not lend additional credit facility to a willful defaulter or any entity with which a willful defaulter is associated for 1 year after the name of the willful defaulter has been removed from the list of willful defaulters. So there will be a list that will contain the willful defaulter's name, details, and also the photographs. From here, 1 year has to be passed. So from this list, the willful defaulter name should be removed. And only after 1 year after it has been removed, they will be able to get loan. So at least for 1 year after being removed from the list, they will not be able to avail loan from any of the entities, regulated entities. The next news is about a contactless payment. Kotak Mahindra Bank Limited and healthcare platform GOQII, it has announced the launch of a Smart Vital Plus Smartwatch. So through this, you can make a contactless payment. So this would enable the customer to make contactless payment as well as to monitor the health parameters. So without a PIN, you can make payment up to 5,000 rupees. And if you want to make a payment above 5,000 rupees, then there is a need of a PIN. So if you see, the e-commerce transaction limit, daily purchase limit is 1 lakh. And in case of contactless transaction limit, the daily limit is 25,000. So the main things to be remembered here is Kotak Mahindra Bank and GOQII has launched a Smart Vital Plus Smartwatch. Next news is that RBL launched RuPay credit card with UPI and NCMC features. So here we know that RuPay credit card can now be linked with your UPI app. So if you have some Google Pay or Phone Pay, there you will have an option to enter your RuPay credit card details, and through this UPI you can pay to your merchant or any other purchase. This card, it has the UPI feature and as well as the NCMC, that is National Common Mobility Card feature. So through this NCMC, you can use it for travel purpose. So when you want to go in metro, using this card, you can enter the metro. So for example, if you see here, this is the NCMC card. Generally, if you have a credit card or debit card, you go to the counter, you pay using your debit or credit card, you get the token, and via the token, you enter this metro. But here, using NCMC, you can directly enter the metro without any token. So this is the purpose of the NCMC card. This two, both the features, that is UPI and NCMC feature, is embedded in this RBL credit card. So with this, the RBL becomes the first private sector bank to offer this feature in a single card. So if you see, this NCMC was introduced in March 2019 in Gujarat by the Prime Minister, and it is an interoperable transport card conceived by the Ministry of Housing and Urban Affairs. The card is enabled through the RuPay card mechanism. Similarly, UPI was introduced in 2016 for a real-time payment settlement to facilitate interbank transactions through the mobile phones. So as per the Worldline India Digital Payment Report, the transaction value of the UPI, it has increased by about 56% in the second half of the 2023 compared to the second half of 2022. Next is that SWIFT partners with Axis Bank to launch the AI pilot to tackle the payment fraud. So SWIFT is nothing but Society for Worldwide Interbank Financial Telecommunication. So this has launched a pilot phase where the AI algorithms will examine the transaction data, and it will also detect any anomaly which indicates towards a fraud. So this will help the financial institutions to track the transactions in real-time data and provide a detailed report. So why is this being done? Why is this AI project has been involved, and why are they tracking the transactions? It is because the fraud cases are increasing day by day. Since the digital penetration is also increasing, side by side the fraud cases regarding the digital transactions are also increasing. So to tackle that, this AI project has been introduced in the pilot mode. So if you see, according to the Reserve Bank of India, total 36,000 cases were registered in financial year 2024. And these fraud cases in the banking sector, it has increased about 300% over the last 2 years. And the SWIFT CEO is Javier Perez, and it is headquartered in Belgium. Next is that Paytm launches India's first NFC card soundbox. So this is how the soundbox looks. So if you have purchased something for 100 rupees or something, then there is a keypad attached to it. So the merchant enters the amount using this keypad, and then here if you see, the card is there. So using a NFC card, so contactless payment is done here. So here the customer places his or her card against this symbol, and then the amount is directly detected. So now, or you can also pay using this QR code. So now this is the new feature that is involved, that is you can pay also via your contactless payment using your credit card or your debit card. So if you see 197 Communication Limited, Payments Parent Company, it has launched India's first near-field communication card soundbox, a 2-in-1 mobile quick response payment device which combines NFC card payment technology with mobile QR payment. So you can pay using this NFC card payment technology, and the merchant will have a keypad where he can enter the amount of the transaction. So this is the new feature that has been launched by the Paytm. Next is the Government of India and the World Bank. They have signed a 500 million agreement for the construction of Green National Highway Corridor project. So this project will be there in 4 states. Those are Himachal Pradesh, Rajasthan, Uttar Pradesh and Andhra Pradesh. Do remember these 4 names: Himachal Pradesh, Rajasthan, Uttar Pradesh and Andhra Pradesh. And the total length of the project is 781 km. The total cost of the project is $1,288 million, and from that 500 million will be provided by the International Bank for Reconstruction and Development, that is one of the arms of the World Bank. And the total tenure of this loan will be 18.5 years with a grace period of 5 years. And this project is expected to be completed by 2026. So the main points to be remembered that World Bank and the Government of India, they have signed, World Bank has providing a loan assistance of 500 billion for this Green National Highway Corridor project, and it will cover 4 states, that is Himachal Pradesh, Rajasthan, Uttar Pradesh and Andhra Pradesh. The total amount of the project is $1,288 million. The tenure of the loan is 18.5 years, and there is a grace period that is also involved with it, that is 5 years. Next is that RBI issued fit and proper certificates to 3 potential suitors for the IDBI Bank. So we know that Government of India is planning to sell its stake in the IDBI Bank, and for that RBI has found 3 potential buyers for that IDBI Bank, and those are Fairfax Financial Holding Limited, Toronto, Emirates NBD Bank, Dubai, and Kotak Mahindra Bank Limited, Mumbai. So if you see, currently the Government of India and the LIC together, they hold 94% stake in the IDBI Bank, and in October 2022 they plan to divest around 60% stake in the IDBI Bank. So the MD and CEO of IDBI Bank is Rakesh Sharma. Next news is that HDFC Securities partners with the Western Finance to offer access to global investing for the Indians and the NRIs. So Western Finance, if you see, it is the Security Exchange Commission registered investment advisor. So this Security Exchange Commission is similar to SEBI in India. This is SEC is like SEBI in US. So this Western Finance, it is an investment advisor. So this will provide secure access to the US stock markets for the international investors. And apart from that, Western will also allow you to buy fractional share purchases of the blue chip stocks, which means like if you know that blue chip stocks are quite expensive, so you may not be able to buy one whole share. So in that case, you can buy 1/10 or you can own 1/15 of a share. So this vested allows you to purchase fractional share of this blue chip stocks. And also this investors, if you see, they will provide full insurance coverage up to rupees 5 lakh in case of securities, and in case of deposits, if you see, the Federal Deposit Insurance Corporation will cover around $2,50,000. The next is that DBS Chief Piyush Gupta is expected to end its term on March 28, 2025. So Piyush Gupta will step down from the DBS group as the CEO and director on March 2025. He had joined the position on 2009. So since 2009, he has been the CEO and the director. The next person who will be taking his post will be Tan Su Shan. So it is she. So she is the first woman to lead the Singapore's and Southeast Asia's biggest bank. So DBS, it is a leading financial service group in Asia. It has also received the world's best bank by the publication called Euro Money and Global Finance. So remember, DBS Chief Piyush Gupta the term will end in March 28, 2025, and the next person is Tan Su Shan. Next news is there are 3 entities received payment aggregator cross-border license from the Reserve Bank of India. So if you see, IdeasCom Limited, Amazon Pay and India Technology Services Private Limited have received payment aggregator cross-border license from the Reserve Bank of India. BillDesk has received license for both export and import, whereas Amazon and Adyen, they have received only for import. That is, they can make payment, they can do cross-border payments only in case of an imports, but for BillDesk, they can provide cross-border payments both for the exports and as well as for the imports. So this PACB license will enable payment companies to offer payment services in the export-import transactions. So especially this involves the international remittances. So this will help the importers and the exporters. Next news is about the penalties imposed by the RBI on various cooperative banks. So Urban Cooperative Bank Limited, Mainpuri, Uttar Pradesh was fined 5 lakh rupees. Nagaland Urban Cooperative Bank has been fined 1 lakh. And Shri Krishna Cooperative Bank Maharashtra with 2 lakh. And Alibag Urban Cooperative Bank with 2 lakh. And Hindustan Cooperative Bank Limited in Mumbai has been fined rupees 4 lakh. Next is the Government of Nagaland has signed an MOU with SBI General Insurance. So this MOU is for disaster risk transfer parametric insurance solution. So this MOU will help to protect the infrastructure of the Nagaland, or if any infrastructure disaster happens, then it will try to reduce the loss, the monetary loss that the state will face. So if you see, this type of MOU is first of its kind in the entire country. So this period, if you see, this MOU period is valid for 3 years, that is from 2024 to 2027. The total sum insured is 150 crores and the premium that will be paid by Nagaland, it will be 4.2 crores per year, and totally out of the 3 years it will pay 12.6 crores. The Chief Minister of Nagaland is Neofio Rio and the Governor is La Ganesan. The MD and CEO of SBI General Insurance is Naveen Chandra Jha. So remember, the MOU is between Government of Nagaland and SBI General Insurance, and total amount insured is 150 crores. The period also is important, it is from 2024 to 2027. Next is that LIC, it has launched 4 term insurance products for the youth. So the first one is LIC UR term, it is in offline mode, and next is LIC Digiterm, it is in online mode. So here if you see, the minimum age entry is 18 years and the maximum is 45 years, and the majority will range from 33 to 75. The sum assured range is between 50 lakhs to 5 crores, and in case of women, the premium rate is comparatively lesser than that of men. The third and fourth is that LIC UR Credit Life offline and Digi Credit Life which is provided online. So these are non-par, non-linked, and here if you see, the death benefit decreases over the policy terms. Here also the minimum entry age is 18 and the maximum here it is 45. So in previous case also the maximum was 45 and here also it is 45. And the majority range will be between 23 to 75. The sum assured range is also between 50 lakh to 5 crore. So these are the 4 products. 2 are available in offline mode and the rest 2 are available in the online mode. Next is the bank assurance partnership. So SBI General Insurance and HSBC, they enter into a bank assurance partnership. So SBI General Insurance and the Hong Kong Shanghai Banking Corporation Limited, they have entered into a bank assurance partnership for the distribution of non-life insurance products. So this will help in the penetration of the insurance products in the country. Remember, it is SBI General and HSBC India. Next is the DBS Bank has launched a new product called DBS Golden Circle, particularly for the senior citizens in India. So this is to provide convenient and secure banking for the senior citizens in India. So DBIL, if you see, it is this is launched by DBS Bank India Limited, that is DBIL. So this is a wholly owned and locally incorporated subsidiary of the DBS Bank Limited, Singapore. So apart from this convenient and securing banking services, it will also offer a cyber insurance coverage of up to 1 lakh to enhance the security. So remember, it is DBS Golden Circle that has been launched by the DBIL. The Managing Director and CEO of DBIL is Surojit Shah. Next is that L&T Finance receives RBI certificate for the NBFC ICC status. So as of now, if you see, L&T Finance, it holds NBFC core investment company status. Now it has received a certificate of registration and it will be a NBFC investment and credit company from now onwards. In 2019, if you see, RBI, it had 3 separate categories and it merged those 3 separate categories into one, that is NBFC ICC. So those 3 categories that were merged were asset finance companies, loan companies and investment companies. So these 3 categories were combined and now they are under one category called NBFC ICC, and this was the license that has been provided to the L&T Finance. So this now the L&T Finance, with this license, they can provide both secured and unsecured loans to various sectors, that is retail, small business and also corporates. The minimum net owned fund for an NBFC ICC is 2 crores. The MD and CEO of L&T Finance Limited is Sudipta Roy. Remember this, very important, it is Sudipta Roy, and also remember the net owned fund is 2 crores. Next is about the ranking that has been secured by RBI. So if you see, the Sovereign Wealth Fund Institute, it had released the top 100 largest central bank ranking in case of total assets in the world in 2024. In that, RBI had ranked 12th globally with a total asset size of 839 billion. So the various assets that are taken into calculation are foreign exchange reserves, Monetary gold, foreign exchange funds, SDR, that is special drawing rights provided by IMF, and also the reserve positions in the IMF. The first 5 positions are Federal Reserve System with total asset size of 7.85 trillion, People's Bank of China with People's Bank of China with total asset of 6 trillion, Bank of Japan with 5.54 trillion, and Deutsche Bank with 2.77 trillion. The fifth position was by Bank of France with 2.01 trillion total assets. So remember the first 3 mainly, it is Reserve Bank, Federal Reserve Bank, and then China's, and then the Japan. Next is also about a bank assurance. So Capital Small Finance Bank has entered into a bank assurance partnership with the Edelweiss Life Insurance. So now the Capital Small Finance Bank can issue the Edelweiss insurance products to its customers. So this will also help in the insurance penetration and help India achieve insurance for all by 2047. That is the ambition of IRDAI. MD and CEO of Capital Small Finance Bank is Sarvajit Samra. The next news is SEBI amended mutual fund rules to curb front running and insider trading. Now, what is this front running and insider trading? So, insider trading is mostly done by the employees of the company. So, when they have the excess information or the sensitive information that can change the prices of the stocks in the stock market, then they take advantage of that situation and perform a trade and get profit from that trade. This is called as insider trading. Whereas front running is mostly done by the mutual funds or the brokers. So what is that? They will have an excess information also. But here in this case, when a big client, like you see institutions and all, when they give bulk orders to the broker. So they will tell in the morning, right before the market starts, they will tell the broker that kindly buy this share and the value, kindly buy share C and buy around 1 lakh shares of share C. So this is a very huge volume. So what the brokers will do that they know that when they buy these amount of shares in the stock market, the price of the share will rise. So what they will do is that they will first execute the trade on their behalf. That is, they will first buy few shares in their account or their key partner's account, and then only they will execute this big order. So when they execute this big order, the price would have raised, and from that they will get their profit. So this is called as front running. So now SEBI has amended the rules to curb both front running and the insider trading. So if you see, insider trading usually involves company executives or employees leveraging confidential company information to gain an advantage in the stock market. On the other hand, front running typically involves brokers or fund managers exploiting the knowledge of their clients' upcoming trades and then gaining profit from that. So if you see, as per the norms, AMC, they are now required to adopt a mechanism to identify and prevent these two in the securities market. So SEBI has directed the AMFI, that is Association of Mutual Fund in India, to bring certain implementation standards within 15 days to curb these two things. So the key features of the standards that they have to implement is that first one is accountability. So as per the new norms, the management of the AMC, that is the CEO and the managing director, will be made accountable if there was any potential market abuse used or seen. So if there is any potential market abuse by that AMC, then the CEO and the MD of that AMC will be responsible or accountable. Next is alert based mechanism. So AMC, they will be required to develop procedure and mechanism to automatically generate and process the alerts in a time bound manner. Third one is processing of alerts. So now the AMC, they are required to maintain a record of certain things that include the chats, emails, access logs, and even CCTV footage of the dealing room. So dealing room is where the trade takes place, right? So there only the brokers will get call from the clients and they will execute the trades. So all the chats, all the emails, mostly nowadays it's not over call, it's over emails and all. So all these should be maintained in a record. Even the CCTV footage should also be maintained in a record. And also the AMC will be required to compile all the alerts, examined alerts, along with the action that they have taken. So what are the alerts that they have examined and what action have they taken? All this should be compiled in a report called Compliance Test Report and Half Yearly Trustee Report, and this has to be submitted to the SEBI. So remember, the two reports name is the Compliance Test Report and Half Yearly Trustee Report. Next is the standard operating procedure. So this AMC, they have to adopt certain policies and procedure. Suppose if an employee has taken fraudulent activities, then what action should be taken against it. So a written policy and procedure has to be there for that case, and this written policy and procedure should be approved by the board of AMC. That is, the AMC will be required to frame and adopt written policies and procedure for conducting examination and taking action in case of fraudulent activities in securities by its employees and connected entities, and these policies should be approved by the board of AMC. Next is action on suspicious alerts. So when there was an alert on the potential market abuse, in that case they have to either suspend or terminate the person or the entities involved in that market abuse. So this is also very important. So when you have found that a person has involved in the market abuse, then that person should either be suspended or terminated. And after doing that, it has to be informed to the board of directors and the trustees also. Next is whistleblower policy. So this is a very important policy. So introduction of the whistleblower policy serves as an additional layer for the security of investors. So this whistleblower policy will not only protect the investors but also the person who has whistleblower, that is even the whistleblower. It will protect both the investors and the whistleblower. Next is the periodic review. So AMCs, they are required to review the procedures or the systems that they have put in place on a regular basis, so it is not outdated. The last one is data sharing with AMC. So as per the new norms, stock exchange and depositories, they are required to develop a system. So sometimes if you see, there will be a data exchange between the stock exchange depositories with the AMFI. In that case, the data sharing should be in a proper way. It should be in a secured way. So that for that also norms and procedures has to be laid. Next news is about the appointment. So ACC has approved the appointment of CS Setty as the new chairman. If you see the appointment committee of the cabinet, it has approved Chala Srinivasalu Setty as the new chairman of State Bank of India, and he will take his position from 28 August 2024. So in June 2024, if you see, the Financial Services Institution Bureau, that is FSIB, it had approved the appointment of CS Setty as the next chairman of SBI. So a little bit about CS Setty. He had joined SBI as a probationary officer in 1988, and then in 2020 he joined the board of SBI as the managing director, and he manages departments like international banking, global markets and technology. So the ACC, it has also approved the appointment of Rana Ashutosh Kumar Singh as the MD of the SBI. So since the MD is going to the moving to the chairman position, so one vacancy will be there, right? So in that place now Rana Ashutosh will come. So Rana Ashutosh will fill CS Setty's place. So he is currently serving as the deputy managing director in the SBI. So remember, the next MD will be Rana Ashutosh Kumar and the next chairman will be CS Setty. Next is that RBI extended MISs for agricultural loans for financial year 25. So now the Reserve Bank of India, it has announced the extension of modified interest subvention scheme for short-term loans through the Kisan Credit for agriculture and allied activities for the financial year 25. So this scheme has been extended. So this will provide interest subvention to the farmers who have availed this short-term credit loans. So if you see, as per the MISs, farmers can access the short-term crop loans for like allied activities, animal husbandry, fisheries, beekeeping and all. For these kind of activities, they can avail short-term crop loans, and it will be provided at a concessional rate of interest at 7%. So the rate of interest will only be 7% per annum, and for these kind of activities, they can avail the short-term crop loan. And if they repay the loan on a regular basis without any due interest, then they will also be given an additional interest subvention of 3% per annum. So we know that the interest is 7%. When an additional 3% of interest subvention is given, then the ultimate interest will be 4%. So the farmer has to pay only 4% of interest. If he promptly repays, then only this interest subvention will be provided. Next is that the interest subvention and prompt repayment incentive, it is available only for loan amount up to 3 lakh per annum. And next, in case of natural calamities, we know that in farming activities and all, this natural calamities can affect the farming activities on a very long term basis. So if you see, RBI announced that in case of natural calamities, the applicable interest subvention will be available for the first year on the restructured loan, and then the normal interest rate will be applicable from the second year. So in case of first year, the interest subvention will be applicable, but from second year onwards, the normal interest rate will be applicable. In case if there are multiple natural calamities or several natural calamities, in that case, the interest subvention will be extended to 3 years with a maximum period of 5 years. And in case even in that, if the farmer makes a prompt repayment, then also the government will provide a prompt repayment incentive of 3% will also be provided. So if several calamities happen, then the interest subvention can be extended up to 3 years or maximum even up to 5 years. And if a prompt repayment is seen from the farmer's side, then an additional 3% interest subvention will be provided by the government. Next is that compulsory Aadhaar linkage. So the Aadhaar linkage will have to be compulsorily linked with the account details and also the loan account of the farmers. So Aadhaar linkage will continue to be compulsory for availing the benefits of short-term loan in financial year 25. So this is also very, very important. In 2020, mutual funds lost about 2,400 crores after the turbulence in Yes Bank. We know that the Tier 1 bonds, that is additional Tier 1 bonds of around 9,000 crores were written off. So the Yes Bank's Tier 1 bonds were written off, and a lot of people lost their money. That is mainly this mutual fund and high sophisticated investors and even certain retail investors to whom the bonds should not have been sold. They have been sold and they have also lost the money. So after the Yes Bank episode, the SEBI provided a timeline for mutual funds to evaluate additional Tier 1 bond as 100-year instruments starting from April 2023. See, as I told that they are perpetual bonds, that is they do not have maturity. So before this, they are what the valuation used to be that additional Tier 1 bond would be valued at the 5-year or 10-year call option. Suppose there's a call option after 5 years. So whatever would be the bond value then at the call option after 5 years, that would be the valuation. But due to this scenario, due to this Yes Bank scenario, what SEBI did that no more the mutual fund will value the bond with call option, but they have to value the bond as a 100-year instrument. So after 100 years, what will be the value of the bond? That value should only be considered and not the call option value. This is because what if the call option is not executed by the banks? Then the retailers will be at loss. So it should be evaluated as 100-year instrument and not the value should not be of that call option, that is after 5 years or 10 years. So prior to this, if you see 8-1 bonds were valued according to the call option on the papers which were 5 years or 10 years. The new norms will lead to decline in mutual fund investments as valuation of ultra long duration securities tremendously release volatility for the net asset value. So we know that the more is the duration, the more will be the volatility. So if you're going to buy an instrument that is going to end, that is going to mature in next 5 years, obviously the volatility of the instrument is going to be less. But if the duration is going to be 100 years, then the valuation is it's not at all going to be certain, because we don't know what will happen the next 100 years, right? It is quite uncertain. So there will be a huge volatility, and due to that, many investors will not be willing to invest in this. So this was the worry of the mutual fund investors. So I hope you understand. Prior to this incident, that is before 2023, the valuation was based on the call option at 5 years or 10 years, whatever was the option attached to that bond. But after this April 2023, what happened is that SEBI told all the mutual fund to value it as a 100-year instrument. That is the value of the bond after 100 years, whatever may be the value of the bonds after 100 years, that should be considered as the valuation, and not the call option after 5 years or 10 years should be considered as the valuation. So the SEBI has directed now a change has been brought, because there was a direction from the National Financial Reporting Authority. They had submitted the report on valuation methodology of A21 bonds to the Ministry of Finance. It had recommended that A21 bonds should be valued based on yield to call, that is call, in order to align with the market practices and Indian Accounting Standards 113 principle. So if you see a National Financial Reporting Authority, they have found that all over the globe, they are valuing A21 bonds only based on the Y2C category and not on Y2M, that is not on maturity, that is not on 100 years maturity. This is the general practice followed all over the globe. So we should also practice that way only and not the 100 years period. So now the SEBI has directed the mutual funds to value their investments in the additional tier 1 bonds issued by the bank on yield to call basis. So now again back to yield to call basis has been changed. So SEBI has told, okay, now mutual funds, you value your investments based on the yield to call basis. You don't have to consider the 100-year maturity period for the valuation. So this recommendation applies only to the valuation of the A21 bonds and not to other purposes. So only this valuation is only for the A21 bonds and not for any other purposes. So remember, before 2023, it was the valuation was based on the yield to call basis, but after 2023, due to the mishap in the due to the scenario of the Yes Bank scenario, the failed scenario, the SEBI had changed it to consider the perpetual bond, A21 perpetual bond as 100-year period and use that maturity value at 100-year period for the valuation purposes. Now again, after a report that was produced by the National Financial Reporting Authority that this yield to call basis is only followed all over the globe. So even in our India, this has to be followed, was given to the Ministry of Finance. The SEBI again decided that mutual funds can now value their A21 bonds at the yield to call basis itself. Okay. Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer or regarding any payment issues. You can contact on directly on this number. Thank you.